What's going on, guys? Hope you're having an absolutely fantastic day. So in this video, I want to talk about a huge catalyst for Alibaba stock and also Chinese stocks in general, right? So let's recap on my personal position, right? So I sold all my Alibaba options at about $107, which leaves me underexposed to Alibaba stock, right? And Chinese stocks in general, right? So basically, Chinese stocks make up about 12% of my portfolio, give or take, at the moment, and I want to get it up to 20%, right? So this is the next catalyst, right? So before that, I just want to talk about why I sold, right? So I sold because it was running very, very fast, right? So from here till here, I think it was like a 30-40% move in just 2 weeks, right? So that's why I sold. I was expecting a pullback, but maybe at this point I'm wrong, right? So most of the time, if you see these huge volumes, right, and then it starts to decline, right, you can see that here, maybe it peaked at 53 million, 27 million here, and then 30 million here, 42 million, 33 million, and then it starts to decline, right? And now it's even in the single digits for millions, right? Normally, there will be a big move, right? And whether the move is up or down, that one we don't know. But we do know that normally this signals a big move coming, right? So that's why I sold at 107 and I thought there was a pullback, but maybe I'm wrong, right? But luckily I held on to all my stock, right? Even though I had a certain view that the shares will maybe pull back a bit. I didn't mind holding stock, right? But I didn't want to be holding options when the stock pulled back, right? So the catalyst that I'm basically talking about is this mainland China and Hong Kong to expand their Stock Connect scheme, right? So with support from the two regulators, CSRC and also SFC, the SZSE Stock Exchange of the Hong Kong Limited, China Securities Deposit and Clearing Corporation Limited. So I'm not going to read through the whole article, but I'll explain what's going on, right? If you have a listing basically in the US and also in Hong Kong, right? If you make Hong Kong your primary listing, right, you can basically apply for this Stock Connect program and get onto the Chinese mainland China bourses, right? And why I think this will be huge for some of the shares like Alibaba or Tencent, right? It's because at the moment there is no such trading, right? You can see Alibaba Health is actually traded on the Shanghai. I think this is a Shanghai exchange. So basically, if you see, this is 3 of the pages I've opened up. So this is the Stock Connect programs, right? Shanghai, Shenzhen, and this southbound SH and SZ, right? So you can see I searched for Baba on all 3 of this, and on 2 of it is non-existent, and 1 of it is actually the health and information technology company, right? So, which leads me to believe that when Baba is traded on this bourses, right, or these exchanges, right, there will be a lot of capital inflow, right? Because primary users of Alibaba's goods and services are all in China, right? Or they have, I think, 1 billion users in China, right? So I think some of them will be interested in buying the shares as well. And if you take a look at, I don't have it open here, but if you take a look at all the Shenzhen listed companies, right? Some companies that are notable that I know about is like I think Kway Chow Mau Tai and all these other huge companies, right? They're actually trading at a PE of 30, right? Which means that the Chinese actually have an appetite for these shares of these businesses, right? So can you imagine if Alibaba went back to trading at a 30 times price to earnings ratio? Basically, it's double this price, right, at the moment. And if we take a look at a few months ago, the news, right? So the Hong Kong Stock Exchange acknowledged Monday Alibaba's application to convert locally traded shares to primary listing from the current, this goes on to say the New York Stock Exchange listing, right? So if you're enjoying the video so far, do help me smash up the like button, hit subscribe, and also hit the bell button and press on all, right? So this will really help out the channel, and also watch till the end, right? Because obviously you don't want to miss any important information. Basically, Alibaba has said that the primary listing in Hong Kong is basically approved, right? So you can see that they are applicable for this stock program, right? So putting on my tinfoil hat a bit, could the Chinese government have basically cracked down and laid the foundation for Chinese investors to get these shares cheap, right? Because you can see that obviously Alibaba maybe 2 years ago was very expensive, right? This was when 30% growth and all of the growth was priced in, right? Basically, I'm asking myself the question, could the Chinese government have basically laid the foundation, right? Do all the crackdowns early on and make sure the company is efficient, make sure the company is trading at a low share price before they offer it to the Chinese people, right? And if that's the case, I think that was a brilliant move by the Chinese officials and the Chinese government, right? Of course, it's bad for the US investors that were in here. Basically, they lost all their money, right? But basically, you have to know that when it comes to the Chinese government, they are just looking out for their own people, right? And we do know that a lot of this, I think, is political maneuvering, right? Because you do want your people to benefit from your company's growth, right? Basically, if we take a look at all the wealth in the United States, right? Most of the wealth comes from paper wealth on businesses and also shares and all these things, right? Bonds as well, right? And what happens when your people don't have access to the biggest companies in your own country, right? Basically, they are doing business there. They are taking money from the people in mainland China, and the benefits all goes to investors that are foreign, right? And I think this is not acceptable for the Chinese government, right? This is just me putting on my tinfoil hat, right? But it makes a lot of sense to me, right? Why the Chinese government would want to make a move like that, right? So you obviously do want your own people to benefit from the growth of your companies, right? Instead of just foreign shareholders benefiting, right? So that is one theory that I have. And I think obviously this would be very good for us if we are currently investors in all these Chinese companies, right? So a second prediction that I'm making is actually that these Chinese companies that are traded on the Hong Kong exchange right now, but not traded in China, right, will go into bubble territory, right? Just like the 2020 mania, right? Because I think every time that something new like this gets done, it goes overboard, right? Obviously, we do expect markets to trend to the happy medium, right? Which is the average and the mean reversion, right? But that hardly happens, and most of the time you can see it's either trading, let's say 6 months, it's either trading below the happy medium or it's trading above, right? I wouldn't say this is expensive yet, right? But maybe when Alibaba is like a $250 stock, in the next 2 years, that will be expensive, right? But let's say it's $250 in the next 5 years or 10 years, then it wouldn't really be considered expensive. So the timing also matters, right? Like how fast the share price growth happens. So that's about all I wanted to share today. So do leave in the comments, right? What do you think? Did China do this to make the shares cheaper for their Chinese citizens and all of that? And if you did enjoy my perspective and the information that I'm bringing and you gain some value from it, do help me smash up the like button, hit subscribe, and also hit the bell button. With that being said, have a fantastic day ahead and peace out.